Hello, everyone, and welcome to the Big Show. This is Investing and Trading Live. As always, my name is Josh Lilquist. Today is November the 1st. We are looking at Wednesday. We had a great month in October. We will look to see what happens in November and see if we get a Santa Claus rally going into December and Christmas time. But today what we're going to do is a quick market update. We'll try to get a monthly recap in the show here today. Well, I got to bring on Luke Young on the show here a little bit later. He's going to bring some stock insight on some different opportunities that might be showing its ugly hand out there, but we're going to bring his dirty hands in here and have him look at that, and then we'll close out with that. But we will let's see here. Let's start with actually subscribing to the podcast. Make sure to subscribe and like the podcast, Apple Podcasts, iHeartRadio, and Spotify, wherever you're listening. Send some questions in. You can send some questions in pretty easy on Spotify. If you're listening on the Spreaker app, that's Spreaker, Spreaker. We appreciate that. That is the podcast site. That being said, let's do our quick market update. Let's look at over the past month. It looks like the S&P 500 last month. Let's get to our monthly chart. Oh, before we do that, we know there is risk in trading and investing. You can and will lose money at one point in your life. This is strictly for entertainment purposes only, mainly mine, but hopefully you find it entertaining as well. That being said, let's start with the S&P 500. And S&P 500 SPY on the month had a pretty decent month, but let's go to that chart. Where are we at here? Here we go. All right, S&P 500 on the month, a nice month, and people are probably thinking, well, hey, that wasn't the market down? And my good friend once said, Dale from Step Brothers, yup. So month to date was down around 6-7% roughly. I don't have exact, but we know that it was down. Opened the month at 426 or so, and then closed at 417. So a great month on the downside with the S&P 500. Did show some big volatility though, getting all the way up to 437 and all the way down to 409, closing near the middle of that actual candle. So that was down on the month. Same thing with the Dow Jones. That was down, opening at 333, closing roughly around 330 on the month. Dow Jones had that's actually 3 months in a row for S&Ps, the Dow, and the same for the NASDAQ. So we got 3 straight months in negative territory for these major markets. The NASDAQ, QQQ, opening up at 357 and change, closing right around 350. So that was also down. And the Russell kind of leading the charge. That was a big drop for the Russell. 176, closing at roughly around 164. So the major markets, 3 straight months in a row down. Is this going to continue? Well, that's what we're going to discuss here on the show. And I'm going to bring on Luke Young on the show here. He's got some stocks he wants to peek at. And we'll just get his insight, and then we'll continue on with a market update as we progress in there. So how you doing, Luke?
I'm good, Josh. How are you?
I'm good. It's been probably 2 weeks since we did a show. It's been a busy October, but that's good because markets were down, and hopefully we have positive results as a result of that. And that's what I want to discuss here is these down markets. A lot of people think, hey, it's sad. It's the end of the world, Armageddon, and markets are going down. 401ks are going down. Well, is that really the case? There are opportunities to profit as markets go down. Real quick, explain that strategy to profit as a down market before we get into your stocks.
There's a few different ways you can profit from the market going down. And there's ways you could basically buy insurance if you were long the market. But, to keep it simple, there's just a term called shorting. You can short the market, which is benefiting from selling high and buying low. And then as well as basically same thing as shorting, you can buy puts in the option market, which basically allows you to make profit when the market goes to the downside. But a lot of things you can do, a lot of technical terms, but just keep it simple. You can short and go long in the market with stocks, futures, Forex, and it's a beautiful thing when you know what you're doing.
You're right, and also there are inverse ETFs, and that's probably, I would say, maybe more common with the average folk out there. Some people do know that it's available out there. Some people don't, but that's another opportunity you're essentially buying an ETF that does the inverse of the underlying. So like I think SH is the inverse ETF to the S&P 500. So that goes up as the S&P 500 goes down. So that being said, I know you're looking at a few stocks here this month. What are some stocks that you're looking at? And let's do a little bit of analysis and get some entertainment for our folks here.
I don't mean to be that guy, but every time I'm on here, I'm always talking about like shorting and the market's going to continue to fall. But I mean, as you guys have seen, it has continued to fall, and that's kind of the whole idea of a trend.
Mm-hmm. I almost brought your name in as Negative Nancy today.
Yeah, I mean it's beautiful if you can short the market.
Yeah.
But if you're on the long side, you hear me talking, you probably turn off the podcast. So I apologize for that. But a lot of opportunity I'm still seeing to the downside. The S&P following a downtrend, the Qs, the technology market, consumer discretionary, and then a few stocks within that. But I kind of wanted to flip this on Josh. I wanted to see, Josh, what are you seeing? Are you seeing anything you could possibly go long on?
Actually, yes. There's a few stocks that are doing pretty good. And I gotta find them here. So one in particular it's kind of funny that you mentioned that. So the play actually was back. There was some with Nike back in the middle of September or end of September. It was bringing some decent premium, and we talked about that in the show. Right now, what had happened was earnings came out and it went up. So it did what you wanted it to do. But that being said, it was too close to earnings. So it just adds risk in the trader investment. And that's not what we want to do in the markets. So that was a play back a while back. But as far as long opportunities, looking at your currencies. So one of the things I like to do in the market is look at currencies because there's inverse correlations. I do have a long bias with the Aussie yen. So looking at the Aussie yen, it's currently at 96.25, and these are measured in pips, not in shares. And I do like this long opportunity. So there was an opportunity that did not get back on 93.25, but now we do have a new opportunity right around 95.74. So it's not just go buy at this price point or buy now because I said that. It's just that it's an opportunity with a long bias based off trend and everything. So I do like the Aussie yen. That being said, even the currencies, there's a lot of currencies that I have a short bias with. The euro dollar, we've been talking about that, currently short about 136 pips. Aussie dollar, currently short about 57 pips on that. And Aussie yen, I think we are short on that, only 14 pips on that. So that being said, there's not a whole lot to buy out there because if you look at my screener here, there's a lot of red in there, especially today. But it's going to be a slower day right now because we have the Fed announcement today at, I believe that's 1 p.m. Central Time. So that being said, there's not a whole lot of opportunity today. It's just going to be slow until that time. It's going to bring some fireworks. It'll bring some volatility, and we'll see what happens with the announcement. Forecasting to stay the same, I believe, roughly. I think 5.50 is what it's at, and it's what they're projecting for it to happen again or stay there. So
they got jobs reports coming out too, right? At that time, or was that this morning?
That was this morning. You had the ADP non-farm employment change, and that was down from the forecast 149 down to 113. So the previous was 89. So it actually went up. So that just basically means that in my interpretation of that is interest rates, increasing the interest rates has been working. But that being said, the projection the actual was lower than the forecasted. So you also have the job openings today. That was actually good. And you have PMI today as well. But yeah, the Fed funds rate is kind of the one that all the investors have their eyes on today at 1 o'clock Central Time. What are your thoughts on the funds rate? Do you think they should continue raising those or hold up like they're forecasting?
I don't know. I think they'll go up. I think they. I wouldn't be surprised to see them. I'm not saying today, but in the future, I wouldn't be surprised to see them at 11% before they come back down to the 5-6% they should be at.
Wow, that's a big jump there. That's doubling these rates again. Well, the interest rates are essentially on an equilibrium model, right? If the economy is too hot, they turn it down. If the economy is too cold, they need to speed it up or give it some cocaine, let's call it. They'll lower interest rates and get more money brought into the market, which influences lending. Essentially, is what it does. So we'll see what happens here today. That'll be at 1:00. So as you're a short-term trader, make sure to be prepared for some volatility at that time. That being said, I do like gold. Gold's been going up here for a while. And the only thing is, so we had a podcast we did, or in a Discord, we called this demand level right around 1825 to 1812. And we got about a 13 or 14 to 1, and it's doing exactly what we're expecting it to. There was a supply zone that it actually is testing right now as we speak the last 2 days. It's interesting that we brought this up now, but for those YouTube viewers, it's on the chart right now. 2008 to 2021 is the zone. It's respected that. It's got about a 1-to-1 off that. Now, I don't foresee this to actually hold, but that being said, it is an opportunity as a target, or it could turn price. But that's why you have to wrap proper capital management around that stuff. So that being said, that is a opportunity, or was an opportunity for long, but it actually is an opportunity now, potentially for a short, or getting out of those positions. So silver has kind of been lagging behind that a little bit, but it doesn't really have any major supply or demand zones to talk about. So that's your other commodities there. So you got a couple stocks you wanted to look at. Was eBay one of them?
I do have eBay.
Let's look at eBay. So eBay, I'm surprised that's even around still. That was one of the best magazines for eBay. Is it?
eBay is like a kind of like an Amazon. People can sell products on it.
I'm thinking, what was that sports magazine with all the East Bay?
I never read magazines.
No, it wasn't a magazine to read. It was for clothing and athletic shoes, and East Bay is what it was called. I don't know why I was saying East Bay.
East Bay.
Yeah. eBay. Okay, tell me a little bit about eBay. eBay is now, I got a daily chart here, and we have really started a pretty steep downtrend. It looks like a falling piano right now. So what's your analysis with eBay?
I'm going to start today with talking about the shorts, and then I actually have a long opportunity, just to end on a good note for some people listening. I want to short eBay at 40.73. So it still has some time to come up, or some price movement to come up. I think it's $2 or $3 if you're looking at the chart. Mm-hmm. But I want to short eBay at 40.73. You can bring it down pretty good amount.
Yeah, I like that. You must be looking at a 4-hour chart there.
Yep.
40.73 to 40, almost 40.41 in some change. That's not a recommendation to just go short that just because. It's an opportunity where if you can put proper capital management, it's a potential opportunity that might drop the market. So I like that one. Do you have any? I mean, this market's been dropping. Do you have any longer term targets? I mean, we have a pivot down at 36. Is that a possible target even?
I believe it would go further than the 36. But then again, when you do get into that trade, that's when you make the plan. Because new stuff could form. There's a good demand zone down where you're hovering at $29, which, think of that. You're shorting a stock at 40.73, bringing it down to 29. It's a very good opportunity to the downside.
Yeah, so basically these markets have some room to fall. That's just based off of supply and demand. Could it shoot straight back up? Sure, it's possible. But odds are saying that there's a potential for it to drop. So I like that one. Any other ones? I think, was it Yum? What is Yum? Is that Domino's Pizza?
I don't know what Yum is.
Let's look. And that's the funny thing about that. if a chart is a chart, right? So it doesn't really matter what you're trading as long as you have an opportunity. Yum, what is that? I want to say it's like Domino's Pizza or something like that. Let's see. Yum Brands. Who knows?
It's a big enough company to have a market share on the stock market.
But that being said, it doesn't matter what you're trading. It's about the price action on a price chart. And the cool thing about that, too, is you don't have any bias. If you don't know what the stock actually is, who really cares? Because some people go and buy Apple because they like Apple products. Well, that's not a indicator, quote unquote, to say, oh, I should be going to buy something. That being said, what's your analysis with Yum?
Same type of story with eBay. A lot of room to the downside. I would be looking to short Yum at 123.23 on the dot.
So you're getting pretty close there. You're looking, must be at a 4-hour chart again. It must be right there. You're exactly right. I do like that zone. It's a nice little base drop. I'm assuming that's the one you're looking at right there on a 4-hour chart. So, the cool thing is you're following trend. Market is going down. And if you look on a bigger time frame, this looks very similar to that eBay with some room to run to the downside with a potential demand zone down at 110 to 107. So that has some room there. I like that one.
Yeah, and I wanted to mention, too, last week, Josh, we were talking a little bit. I wasn't on the podcast. I think Troy was on.
Troy was on a couple weeks ago, yeah.
Yeah, but I had an opportunity last week. Same type of story. Same pattern as like the eBay and Yum. You're capturing a supply zone and a downtrend on a stock called MKTX. And I got actually short this stock at 242.15. And I closed out. I was trailing a stop. I didn't have an actual target at 209. So it was a 16% fall in the actual stock. It was a great day, great trade, great week.
Right at earnings, huh?
Yeah, so I was actually in.
Was that a straddle or something you were doing?
No, I was short the stock about a week before the earnings. And, I was probably 2-to-1 in the money, 2-to-1 risk to reward.
Yep. And
earnings came out, and I wasn't expecting anything. Normally, this stock doesn't move much with earnings, which is why I didn't do anything. And, it's just something that fell 16%. So it was a great day. I just wanted to show that visually because it's a very similar pattern to eBay and Yum. A lot of these things are in the same type of ballpark here.
Yeah. And that's the nice thing about these markets is that the trend is your friend until the bend at the end, right? And these have some room to fall. I mean, you kind of kicked off your segment here with, you don't want to be the downside guy, but when there's opportunities, it's just there's opportunity, and you have to take advantage of that. That being said, not every trade is always going to be a winner, and that's why you have to keep your risk small at all times and manage that risk so that way you can stay in the game longer. So that was MK something or other, and we talked about eBay, Yum. Any other stocks that you're looking at? Let's go back. Oh, go ahead.
I'm not necessarily looking at any stocks. Something could come up tomorrow or the next day, but ETFs. I mentioned to everyone I had a long opportunity. You're going to laugh at this, Josh. So it's going long on the SQQQ.
SQQQ, is that the triple Qs or something?
So it's the inverse QQQ ETF. So basically, this market will go up when the actual Qs are going down. It's an inversely correlated.
Yep, we mentioned that
market.
earlier. Yep.
And, huge opportunity to go long around 2059. You could bring this up to the next supply zone at 2624. So that's about a 25% increase in the actual chart, which would be a 25% decline in the Qs market, if that makes sense. So this is a way people can go long on something, but actually shorting the market. So tough to wrap your head around if you're brand new, but it's a great opportunity.
Yeah, that being said, that doesn't look good for the overall markets, though.
No.
So It did break. It is in a 4-hour uptrend and a daily uptrend. We have higher highs. We have higher lows. And one thing I wanted to talk about going into, I believe I was looking at the S&P 500. These markets, they do very similar things. So going back to the S&P 500, since we've started a daily downtrend, the market dropped about roughly 5%. It retraced itself back up right about 4%, then dropped again almost exactly 5.5%, then retraced back up almost exactly about 4%. Now we just did that drop again of 5%, and it went just a little bit more. It dropped about 5% again. Now we're on the way back up again. So these markets, they follow similar habits, and that's what's nice about when you trade multiple assets. But when you do one frequently, you kind of see the tendency. So we're seeing a retracement up about, I'd say, almost 2-3% in the past 1, 2, 3, 4 days. Okay, so it might be an opportunity to look for shorting opportunities around that 4 to 5% retracement back up. Now, I don't see any major supply zones. That being said, you look at a 4-hour chart. What's your thought of this supply zone right here, Luke? On the S&P 500, you have kind of a base drop that it's coming into right now.
Do you have that at 422.64?
421.91 to 424.25 roughly.
Yeah,
same area.
I had it written on my paper. I just didn't want to come in talking about all these shorts. So I wanted you to mention something. But I love it. I love it to the downside.
So that's some improv analysis as we're talking here. That being said, I want to go to the inverse and see if it's actually correlated. So that inverse for S&P 500 is the SH. And let's just go see what this one looks like. Is there a demand? And there actually is a demand zone.
Isn't that crazy?
Right next. We're not quite to it on the inverse of this S&P 500. So that being said, do you ever use correlations or inverse correlations, say with oil and the Canadian dollar, the inverse ETF and the actual ETF? You ever use those as odds enhancers?
Yeah, you definitely can. It's a lot better than, putting Bollinger Bands or any of those indicators on a chart, because it's actually price movement, it's price action, what you want to look at. Yeah. I know a lot of people that use, when they're trading currencies, to look at USD. When USD is in demand or supply, what that's going to do to other currencies, and they use it as an odds enhancer. It's beautiful. Yeah, let's go look at the dollar. So USD is the dollar. Has been hovering in that range from 107 to 106 area for about a month now. But that being said, we're seeing a little spike here the last couple days. And a lot of times the stock market is inverse to the dollar. Dollar goes up, stock market goes down, and that's what has been really showing since July. The dollar has just been soaring since July, up around 7% since July. You go look at the market. Let's look in the S&P 500 since July, and the market is down. I got lines all over my chart now, but market is down 8%. So very similar. So it's just, when you see supply or demand zones touching or approaching at the same time, there's opportunities there. So we're approaching a supply zone, the S&P 500. Let's go to the dollar. Similar to the dollar, too, a lot of people look at the VIX for the stock market, which is a fear and greed indicator. Okay, volatility has spiked up, but that being said, it's dropped over the past week or so. Currently at 1745 with the volatility index, the VIX.
Let's go look at since July. See if this is up 7% since July. It doesn't sound right, but it's up 42%. That doesn't sound right, does it?
It gets like weighted every day, and
Yeah.
it's kind of hard to explain, but
Yeah, that's
similar
incorrect.
looking chart.
Anyways, yeah, the chart's very similar. So that being said, using correlations could be a good thing. Look at this now. You were talking about ETFs. I got about 12 ETFs on my watch list here, and almost every single one is green right now. So the market is up a little bit on the day. The S&P 500 is up about 0.73%. The NASDAQ is up 1%. The Dow is up 0.5%. And the IWM is the slower, the lagging of the three, or the four is right about even on the day. So really awaiting.
It's funny too, because as you're saying that, you even have it on your chart. They're all entering supply.
Mm-hmm.
Most of them.
Yep. So
Let's see these go red, Josh. Come on.
hey, that's what the chart suggests. So we'll see if that happens. We don't have a crystal ball, but if we did, boy, wouldn't that be nice? All right, there's one last one I want to look at before we close the show out here, and you know, I got to give it to you on this one, and it's UPS. We got to bring it up every time we talk. You called after they increased the salaries. You said that just doesn't look good for the stock. Since we were on the show, if you want to listen to the archives, and you called, I believe you shorted that a while back. Probably not in it anymore. Probably closed that out. Maybe I don't know, but down about 27%. Since roughly when they did that. And we talked about a demand zone. We must have talked about a demand zone around the 120 area because there is a mark on my chart. Do you see this potentially continuing to the downside?
Yeah, like,
Since you're negative all day.
something like this. I mean, there's nothing stopping it until the 120. Let's put it that way.
Yeah, there's nothing quality there. That being said, we're seeing a little retracement here of about 6 days. So it looks like UPS is coming off of some sort of demand zone up about 5%. I don't see anything to really talk about, but that being said, it turned right at a pivot. So that being said, we'll toot his horn on that one for UPS. I like that call. I was on the opposite side of that, so that being said, a good show. Thanks for coming on the show today, Luke. And we got to do this more often. We can't let 2-3 weeks go by when we do a show.
I think you lose viewers when I talk about shorting.
We might. Who knows? For those of you that don't like shorting the market, send some questions in to Luke no. No, definitely, if you have some questions on the show, if you like the show, make sure to subscribe and smash that like button. If you don't like the show, send Luke an email. You can find his email somewhere, and let him know how he can improve the show. That being said, collect your profits when they're given to you and protect your losses, keeping them small. Until next time, retire young, my friends.